Yeah, so I don't see the Fed as being aggressive or really hawkish today. I think they have to change policy given the economic growth and given what we're seeing on inflation. So a taper, ending of a taper, and in 3 to 4 hikes is kind of normalization of policy, right? And then I think after they do that, they can actually be data dependent. In fact, my theme for 2022 is data dependent. We're all going to be data dependent, right? So after they do this normalization, let's see what happens. And I don't think normalization changes the course of the economy growing above trend, of inflation being above trend. Maybe it comes back a little bit in the second half of the year, but I think it's still going to be elevated. And so we'll have to see what the Fed does at that point. But it doesn't change the pent-up demand in the economy, and that's services mainly, and that's 70% of our economy. So we're rooting for the pent-up demand and consumers to spend. But into this decline, I did see some opportunities, much like many of us. But I'm looking at high quality, best in breed, number 1 or number 2 in their industries, with great balance sheets. And if there's one theme so far in earnings, that I know we're early, but one theme that's come across loud and clear, it's free cash flow. And it's surprising to the upside. And why is that important? Because companies can then pay down debt. They can actually invest in CapEx, which we haven't seen a real CapEx cycle in quite some time. They can increase buybacks and increase dividends, which they've been doing for many years. But in addition to that, they're going to try to find some growth. And M&A last year, $5.8 trillion, an all-time record. I think that continues as well. So that's why I saw some names. I continue to look for some names. Pete mentioned the financials. I'm 600 basis points overweight by financials. And after earnings, I still want to buy more. I want to be even more aggressive there because of the valuations and the capital returns. You know they're in there buying on the bad days, right? They're telling you that practically. But there's plenty of other areas. It's in tech. It's also value. It's also reopen. It's a combination. So stay diversified and pick your spot. And stay patient.
So, Joe, Farmer Jim is confident that we hit the bottom. Tom Lee says you can buy stocks. It was probably the bottom. Others clearly are echoing that. I read it to you from down on Wall Street today. What about you, the guy who runs the ETF named Joe T? Got a lot of stocks in there, Joe, that are hanging in the balance of this call.
Yeah, for sure. And, you know, I think we had some great comments from both Pete and Stephanie, and it really is a market of stocks. And that's the way I'm absolutely thinking about it. Steph is talking about free cash flow generation. Let's keep in mind, strong balance sheet companies will continue to underperform until you get that rate hike. In fact, if you go back to 2004 for the S&P, they underperformed by 3%. On the other side, when you finally get the rate hike 3 months later, they reverse the 3% negative performance, and they're actually 4 months higher. So I think that when I look at this market right now, Scott, what I see is that the NASDAQ is 5% below the 200-day moving average. Can all the indexes rally towards their 200-day moving averages? And Jimmy's correct. Absolutely, that can occur. But do I think that the NASDAQ, X the FANGs, has seen the low for the year? No, I do not. Do I think the Russell has seen the low for the year? No, I do not. Do I think that companies that are non-profitable have seen the low for the year? No, I do not. Do I think on Monday you had a tremendous opportunity to buy stocks that are going to experience the V recovery, as I talked about Monday? Without question. And those names are the NVIDIA, the Adobe. Pete's talking financials. That's a Bank of America or a Berkshire Hathaway. Jimmy's going to talk about defense stocks. How about Lockheed Martin or Northrop Grumman? You could look at J&J or Merck. Those are the type of companies that I think you want to own right now. I think what a balance sheet looks like is finally going to matter in this market for the first time in the last 3 years. Okay.